This is the Friday, May 29th, 2015 version of the Market Plus segment. Joining us now is Sue Martin. Sue, welcome back.
Thank you, Mike.
Now, we do have a lot of great social media questions for you, but I want to start talking about the cotton market. We saw that big sell-off last week, a little bit of a rebound this week. Where are we at?
Well, when I look at the cotton market, I think it's interesting because cotton has been moving sideways since the lows of 2012, June of 2012. Went sideways, dipped down for a little bit, another little ledge of support, moving sideways. I think you're looking at a market that's dealing with probably the worst. Cotton is an oil seed. We have to keep that in mind. And, of course, production's down this year on cotton. And, of course, with the wet weather, certainly not kind to cotton. So I think cotton's got a little bit of weather in, support underneath it. Globally, Chinese demand is supposed to be down a little bit. But then, again, oilseeds in general are having issues. And you look up in Canada, and they're going through some frost freezes, and canola's having some issues. Nothing's just percolating real special this year, not like last year. So I think cotton's got some merit. Do I think it goes anywhere real fast? Probably not. We're still in this sideways base. But the thing is, when you've been basing a long time, usually there's only one other direction, and it tends to be up.
Okay, so there could be some upside here, especially if maybe some crop conditions start to get bad with the moisture. We'd need some kind of catalyst.
Well, we'll get a catalyst, I think, this year. But to get that market really moving out of the sideways phase, maybe we're looking at more of a 2016 market. But let's put it this way. I think you've looked at the worst. And so I think you're in a sideways to maybe with a little upward bias.
All right. Now, speaking of demand, as we look on the oilseed side, we got a question here from Phil in Ontario, Canada, on the corn demand side of the equation. He's curious, are there any demand segments in the corn market that we're either overestimating or underestimating? Anything out there that strikes Sue Martin as being poorly judged here in this market?
Well, when you come into demand, usually the cure for low prices is low prices. And export sales are running, they were underneath, and they're starting to catch up a little bit with the 5-year average. So I think that's good. I think the dollar's not really hurting us, so to speak, in corn. You're feeding cattle and hogs heavier, and so that's usage. And yes, we're dropping off of, with avian bird flu, and yet, chick placement, egg sets are up. And up nicely, and I suspect they're going to stay up as well as they can because of the situation. And I've noticed that out of the Food and Ag Organization, FAO, I've noticed that we're getting changes versus various countries for egg products. And I think that's rather interesting. I think we're getting ready to import a bunch of egg products.
Interesting.
And why wouldn't they with a dollar high like it is anyway? So I think that's about to happen. And, where before we've had some pretty tough restrictions, I think they're starting to loosen up on those a little bit because of the situation we got going. And, let's face it, eggs are in everything, in products, mayonnaise, Kraft foods, mac and cheese, pasta, ice cream, everything. And so I think that they're looking at food prices going up as a whole on a lot of stuff, and we're already seeing it at the grocery store. So I think the government's looking at raising imports on egg products, and
sure.
And I think that's to be expected. So I guess in a way, I think our demand, you look at ethanol, and the processors are doing well. I think the outlook for the processors is good going through the summer. I think there's plentiful supply of corn. And I have a thought there is that, these guys that have old crop corn to move, if you didn't do basis levels, I'd sure be trying to get some, because once you get into July, if you carry that old crop corn past July, and we have any heat much at all this summer with the early planted crop, we could be looking at a lot of corn being harvested in September. And you might want to be sort of careful there that you don't all of a sudden have new crop that's infused back into old, and you now have this old crop to get rid of, and all of a sudden these end users don't have to just ante up. They can just go hand to mouth and have a pretty good supply coming at them.
Don't let the old crop corn overstay its welcome.
That's exactly right.
Interesting. Now, you mentioned low prices tend to be the cure for low prices. And we've got two folks here, Facebook, that are curious about the timing of when those low prices will cure the low prices. Todd in Rice Lake is curious about when we'll see $4 corn, again locally. And Grant in Winthrop, Minnesota is curious when will we see $4.60 corn. And I'm going to go out on a limb and bet we'll see $4 first.
Do you suppose? Well, I think the $4 corn, I think is very doable this summer. Now,
on the cash side, or do you think we'll see it just on the board?
See, here's the problem. I think there's so much cash out there to come that I think it's more of a futures-led rally because of all the heavy short fund position coming out of that position until they see that that crop is made. Once it's made, if they feel good about it, they're going to hammer down, and we're going to drop off seasonally into fall like normal. And I've already done timing on corn for next year for most years like this, years ending in a 6, what have you. And there is a pattern out there, and it's a good one. And it usually comes off of a low in the fall of the year before.
Okay.
And so I think that corn will, after the summer rally, I say EKG blip because it could be fast and furious. The weather services I'm following are tending to indicate a little different than many of these other services out there. It'll be interesting because I'll get some updates here this next week. But so far, the weather that's been indicated has been dead on. Go look at the Farmer's Almanac, same thing. It's been dead on for what it's been predicting. It was calling for cooler temps in spring and moisture. And then it calls about summer being hot and dry through a major portion from Canadian border to the Gulf. And so God forbid for those Texas farmers that have corn out there that looks late planted, behind, and then, if they make it through pollination, but yet it turns hot because it might be shallow rooted.
And we could see that all throughout the Midwest, given the large rainfalls we've seen as this corn is emerging.
Absolutely. And you get to the north, from what I'm picking up from clients in, like, say, North Dakota, what have you, corn has taken a back seat to wheat and soybeans. And I can see that. They went through an awful tough time last year with the rail. So they're trying to do other things, and corn doesn't carry a very nice picture up there for basis and what have you. I can see why they're doing what they're doing.
All right. Now, on the program, we talked about the future for the meat markets, and we've got a question here from Jesse in Cascade, Iowa. And Jesse is curious, on the consumer side of things, the retail buyers in the grocery store, beef prices just hit a 5-year high, and he's curious, have they peaked, or should we expect to pay more for beef here yet this year?
Well, we've hit a 5-year high, or a record high, with, I think, what did we get, over $265 in the wholesale box beef, in the choice. I think it's going to be interesting. If we see new highs in the beef market, I think it comes later in the year, maybe in the October, November, December time frame, maybe even the turn of the year, somewhere in there. Now, that December time frame this year is going to be interesting because normally it's very strong seasonal to get a break from about December 5th, 8th down, and we've done that for 2 years in a row. So this winter, it's going to be very interesting to be watching what happens. Economy is going to have a lot to do with that. We need to watch that. There's some talk the economy is going to have trouble in the fourth quarter. I don't know. We'll see. But I think for right now, another thing, it seems like we've had a better grilling season. But, you get hot in the summer and people don't like to eat as much.
And it's probably true that folks in Texas maybe haven't fired up their grills for the past 2 weeks.
They haven't been able to. Yeah, they have not been able to. And the East Coast and the West Coast, they've had some better weather. But, I think that when we look at clearance off of the Memorial Weekend, which is one of your majors, because you look at the 4th of July, that tends to be a hamburger hot dog weekend, I think that we've seen a disappointing clearance.
So probably elevated prices, but maybe not too much higher.
Right, but yet got to keep an eye because we may be very tight supplied on cattle numbers come in that fourth quarter, latter part of fourth quarter, first quarter of next year.
All right, so we'll have you on to talk about that before we get to that point.
Good.
Thank you so much for joining us, Sue Martin.
Thank you.
And thanks to all of you for sending in your questions via Facebook and Twitter. Please continue to do so, and we will get expert analysis right to you. Thanks for watching, and have a great week.